Well, Nate, how are you doing on Super Tuesday?
Election time, baby. Election time. I'm doing great. Doing great. Just thinking about the consequences of the election either way. So I got some comments that I'll chip in a little bit on that.
Yes, we will definitely be getting into that. I know there are a lot of people that are on their edge of their seat. We're going to be talking about what that looks like, regardless of what happens. We also have some awesome news to share with you. We've got a new deal that we launched last week that is going like gangbusters. We're going to be talking about that. We're going to be talking about interest rate cuts. The chances are there might be another cut right around the corner. We're going to be talking about what that looks like. We're going to be talking about what's going on with multifamily. And we're going to be talking about the forecast for 2025. Can you believe it's 2025 almost, Nate?
It's like every single year of my life, it just goes a little bit faster. I notice it in the kids' growth spurts. The little one, literally my 4-year-old is now, all of his clothes have been handed down to the 18-month-old. And I'm just watching it. It just goes faster and faster, man.
It is it I can't believe it's 2025. I mean, I still remember Y2K. Um I can't believe that was 25 years ago. It is crazy how time flies. We are also going to be teaching you guys a little bit. One of the questions that came up, it actually came up on a call I was doing with a potential investor today. He said, what are the things that you look for in the markets that you invest in? If you are wondering, like, what should you ask somebody who does syndications, whether it's us here at Home Invest or somebody else out there, if you are wondering what are the questions that you should be asking when you are on the call with them to know if they know what they're talking about, if you're going to have an actual good deal, and if you should trust the person. We're going to dive into that. We have 5 different questions that we are going to take you through. So we've got an action-packed show for you. Before we jump into it, though, Nate, how do we start everything here at Home Invest?
If it's cool with you guys, are you guys cool if we say a quick prayer? Let's do it. Dear Lord, we ask that we know that you are the one that puts kings and queens in places. And we ask that you do it in this great nation, the United States of America, with great diligence today. We ask that everyone who is able goes out and votes today and just does their civic duty. And regardless of the outcome, we accept it and we pray for the leader. And we pray that they will take us in a direction that's going to bring prosperity to everyone that's here. In your name we pray. Amen.
Amen. If you guys are new to Home Invest, if you're new to our world, the gentleman that I'm joined by, he is Nate Armstrong. He is the CEO and founder of Home Invest. Our mission here at Home Invest, we're based on Matthew 25. It is the parable of the talents. We are here to help you be great stewards of what God has given you. Whether you invest with us or whether you invest with somebody else, we're here to give you, one, the news that will let you know how to make great decisions. We also have trainings, we do webinars, we have events, we have all kinds of stuff that we do inside of Home Invest, all with the purpose of giving you the information, as it is the cornerstone allowing you to find financial freedom. That's why we're here. We want to help you build generational wealth for years to come. With that being said, Nate, what is our deal? We have a home run grand slam diamond in the rough deal.
We do, and I just have to give one quick change. So, Steve, I'm no longer the CEO. You see,
The
we had a
co-CEO.
I'm a co-CEO. Yeah, we've got some really exciting news at Home Invest. We have an equity investment that came into the company, someone that's been working with us for a while, but they really saw what we were doing and saw the growth trajectory of and what we're doing with investors and all that kind of stuff. And they came alongside of us and joined the company. And so now we have a co-CEO. We'll have to do a feature segment where we do introductions and things, but I'm super excited. The team's excited. It provides a lot of growth capital for us to continue doing what we're doing. So I'm co-CEO going forward.
That's awesome. You're still the founder. You still get to wear that hat. So founder and co-CEO. I've got to get my language right.
We'll have fun.
We will. So, all right, let's jump into the deal. If you guys have been hanging out waiting for an amazing deal, this deal is great for a couple different reasons. The first one is it is under market rent by a little bit more than 30% by our calculations. The second reason is our goal with this is within 24 months to give you 90% or more of your investment capital back, but keep you in the deal to get infinite returns. We are going to hold on to this property for a long time to come. Nate, tell us a little bit about Morgan Terrace.
Yeah, so this is in a market called Oklahoma City. Those of you that know Oklahoma City, you've probably seen one of the most important factors. This deal's unlike anything else out there because of the market. Now, when you see the images of the property, you might say, well, Nate, that's not pretty. That doesn't look like the last building that you guys took forward. And you're right. You're absolutely right. But what's more important in real estate is the numbers. Okay, so don't fall in love with the pictures, fall in love with the numbers. And by the way, we know that the building's dated. That's part of the reason why we got this thing at nearly half of its potential value. But what we're going to do to it, like you've got images of like this. This is on site right now in some of the units. There's 11 units that we need to go in and renovate and do some stuff too. But some simple cosmetic upgrades bring this property to the modern era. What you really want to focus on with multifamily is, do you have population growth? Because if you have population growth, it doesn't matter if you buy the worst looking property in town. If you have population growth, your demand goes up. Your rents can go up, therefore your value goes up. So that's what you really want to focus on, population growth. And then secondary would be job growth. Do you have job growth? So this particular asset, it checks those boxes for us. Steve is exactly right when he's talking about rent growth potential. This particular asset's rented at $1.08 per square foot. We know that the neighboring properties, after assessing all of them, they're renting at about $1.35 per square foot. So we have 20% plus that we can grow in the rents. Additionally, the seller on this one, he died, unfortunately. And his daughter lives in California. She hasn't been able to keep up with the property the same way that he had. And so the property needs some love. And so right now it's at 85% occupancy. That means immediately from day one, if we go in there and manage it the same way that we manage our other assets, we'll be able to lift this occupancy. So bottom line is this: when someone invests in a deal like this, because we're buying it at such a big discount and we have such big upside, we are projecting a cash out refinance of 90% or more of all capital invested in the first 2 years. So what does that mean for you as an investor? That means if I put in, let's just say 100 grand, I can expect in the first couple of years that I'm going to get most of my money back, and I still own the asset. Let me know in the comments if you like to do deals where you can put some money in, you can get your money back, and you still get cash flow forever. If those kinds of deals are fun, just put yes in the chat. If you can put your money into a deal, some short period of time, get your capital back, and then still get cash flow potentially forever, is that a good deal? Put yes in the chat. I see that. Yeah. Zoom user. Yes, Anya. Yes, Patrice. Awesome. And so I love those kinds of deals too. And we hunt really, really hard for this. This is only the second one in 2 years that we've found where we feel strong enough to come out and advocate like this. So they're not easy to find. You have to negotiate super hard. In fact, if I told you the whole story on this one, you'd get a roller coaster ride and you'd be here for an hour. But it hasn't been easy to get it where it's at right now, but our team's done a great job bringing it here. So just kind of from the 10,000 foot view, it's older, it's dated, it needs some love, but it's all cosmetic stuff. It doesn't need major surgery, it just needs a lift inside of it. So that's what we're going to do to it. We've got 11 units right off the bat that we can renovate. And then as leases turn over, we'll continue to update units and bring more rent to the property. Steve, the second part that I'll just hit on this really quick. We talked about population growth. I'll put it on the screen right here for a second. You can Google search it yourself, but Oklahoma City grew by 1% in the last year. That might not sound like much, but the national average is closer to 0.5%. So when you have a market that's growing twice as fast as the national average, you ought to pay attention to that. That just gives underlying fundamentals that are really strong. And then job growth. This is right next to Tinker Air Force Base. I would make an argument against anyone that Tinker Air Force Base is the most important base in the United States, the Air Force. It's not the largest, but it renovates fighter planes. Right now, fighter planes, they're not being used on US soil, but they are being used other places right now. And consequently, there is a lot of activity happening on Tinker Air Force Base. So much so that October 1st, just about a month ago now, Pratt and Whitney, jet engine makers, they just announced that they're going to expand their existing facility at Tinker Air Force Base by investing another $255 million into it. They're making some of the fastest jet engines in the world there. It's just more jobs, more commitment going into this area. So all around, like, this is a absolute home run property for us. If you're wondering, well, why on earth would Home Invest, us crazy folks over here, bring a deal like this to you? There's a couple of reasons. Number one, when we do deals like this, we do get paid a fee. We get paid, it's called an acquisition fee. It's kind of like a real estate broker, very comparable to how a real estate broker is paid. But that's not why we do it. The reason that we do it is because we earn an equity stake in the deal. When you bring your capital into the deal alongside of our capital, which we as owners of the deal and the company, we put capital in as well. When you bring your capital alongside of our capital, we get to earn a percentage of the pie. And the percentage works like this. If you come in for 100 grand on the deal, which is our minimum investment, then you get 70% of the pie and we get 30% of the pie. If you come in with $500,000, then you get 75% of the pie and the managers get 25%. And then for the folks that come in with $1 million or more, you get 80% of the pie, and then us managers get 20% of the pie. We have certain preferred returns set in place so that you get paid first before we do. All kinds of protections for investors. We try to make this very, very investor friendly for all of our deals, which is why the last deal that we published filled up in 8 days. If something like this is exciting to you, or if you want to explore more, then what I encourage you to do is just book a call with us. Let's jump on the line for 15 minutes and let's see if we can help one another as we close it this year. This will be the last deal of 2024 for us. And it looks like Sue just put the link in the chat. And if you're following us on social and you don't see a link, just write call in the comments and our team will send you over a message with the link for it. Steve,
Awesome.
that's the deal.
Awesome. It is a screaming deal. They always tell you to invest based on the numbers and on the cash flow and not on buying the nicest piece of fancy looking property. And this deal fits that 100%. If you're coming from the single family world, you'll get that right away. If you're new to multifamily, feel free to grab the link that Sue put in the chat, book a call with myself or Sue or Doug. Anyone on the team will be happy to walk you through the numbers. And again, whether you invest with us on this deal or on a deal down the road, we are here to help you build generational wealth and learn the knowledge that helps you become a great steward of what God has given you. Although this deal is a great deal and it's filling up very quickly. All right, that is going to move us into the news. And Nate, we've got some interesting news. I actually want to start with the presidential pre-election bump. Hang on a second. I'm going to share my screen here. So this to me was super interesting. Am I sharing the right screen? Can you give me a thumbs up? I have a lot of windows open.
New York City real estate is seeing a pre-election bump.
Yep. So this is really interesting because a lot of the times we've seen actually people hold off on buying real estate. They hold off on investments. They hold off on everything going into the election cycle, usually like 2 to 3 weeks beforehand. But we have actually seen a lot of activity. And this article talks about why. Nate, you have any speculation? You might have read the article.
Yeah, I did read the article, and it's talking about how the author cited that New Yorkers are smarter. They know, and they see a good deal and they take it. What they're worried about is that after the elections, interest rates might come down and buyers might return. So they're saying they want to buy now before interest rates start coming down. So they're basically grabbing as much as they can before the rocket ship takes off. That's kind of the premise behind it.
The other thing that we talked about it last week on the Opportunity Zone. I think we talked about it the week before as well, is there are tax benefits that are available right now that might not be there come next year, depending who gets elected. Do you want to talk a little bit about the Jobs Act and what that means, and what we're facing depending on who gets in office?
Yeah, this will probably be the most important thing I say today. So, Tax Cuts and Jobs Act passed in 2016. They basically made it so that when you invest in real estate, investment real estate, you can get some pretty hefty tax breaks. It's through this vehicle called accelerated depreciation. And I know that's a big word. Don't worry about the word. Think of it more. I tell my 10-year-old it's a tax credit. It's not really a tax credit, but it acts that way for people like us who do real estate investing. And so, consequently, 2 years ago, it was really high. Now it's starting to fade out because the way that they got the law instituted is that they would basically bring it on full force. And then every single year it would reduce until it's gone. Right now, we're at 60% of what it was in its prime. Next year, it drops to 40%. A couple years from now, it'll be gone. So there's tax benefits that are on the table right now that are going to fade out potentially if that law doesn't get reenacted in the next presidential administration. So there's a lot of people grabbing real estate right now, consequently, because they want to take advantage of those tax benefits. 2 years ago, I got a refund on my federal taxes. This year, it looks like I'm going to pay around $5,700, something like that. And I had a very blessed financial year, but because of that, those tax benefits, I'm able to offset that and pay much, much less in federal income tax.
The reason, so if Trump gets elected, he has said that he is going to make the Jobs Act permanent, which means we'll actually go back to 100%. Whereas Kamala has said, she wants to do away with all of those and possibly put some other rules in place that will be less favorable. If you're going to invest in real estate, there is no reason that you should be waiting. And that article kind of points towards a couple of the reasons that people are taking action right now, because they're scared that depending who gets elected, we might lose out. Pretty important.
If you want the full election, post-election analysis, join us tomorrow. We have another training. I'll drop the link in the chat in a minute, but we have a training tomorrow that we're going to hit on the post-election analysis. So we'll give you the playbook that we're about to follow. And we'll find out tonight, hopefully by midnight, which playbook that is, so that we've got it ready for you tomorrow. We're post-election analysis and training tomorrow.
Awesome. All right. So the next article, no big surprise, multifamily bargains coax investors off the sidelines. How much is Blackstone putting into the market right now, Nate?
I forgot the exact amount. It was something like 23 billion with a B, but it was a bit ago when I saw that article, so I forgot the number.
Yeah, it is a huge number. It is multiple billions that Blackstone is starting to deploy into the multifamily sector. So the deal that we closed in 8 days, that deal came to us because there are amazing multifamily bargains out there if you know where to look. The current deal that we just talked about in Oklahoma, that deal came to us because of what's going on in the marketplace. We have seen more things shifting. We've seen a lot of people that took out bridge loans that now are expiring, that they're not able to refinance out of, which means they have to bring the deal to the market and they have to take a haircut on the deal. This article kind of breaks all of that down and it shows why that is happening. Nate, what stuck out to you in this article? Was there anything?
Mostly that the interest rates, like the environment of interest rates, it affects a lot of things. But for multifamily already saw its cresting period, its bottoming out period, probably 9 months ago. We will know, history will tell us in the future when it actually was, but we feel that multifamily already hit its bottoming point, and a lot of other multifamily operators feel the same too. They're basically saying in this article, even if the Fed cuts rates a little bit more, like, sure, it's going to help things, but at the end of the day, multifamily already bottomed out, so they're grabbing as much as they can. So I found that interesting from other operators' perspectives.
Yeah, for sure. I mean, a time of challenges, anytime, I mean, the Warren Buffett quote that we always talk about, when there's blood in the streets, that's when you need to be out taking action, you need to be greedy. I think right here, Multifamily has faced a number of headwinds for some time, but there is now ample evidence that conditions are firming and likely to draw new buyer appetite. Well, that's what's happening. People are starting to come out of the woodwork and buy, and it's stimulating new investor activity, which is awesome. We're going to continue to see great deals. We are searching. If you guys were on the pipeline call that we did last week, the pipeline call is for our current investors. We talk about the deals that are coming up. We got to introduce Ashton. Nate, do you want to talk a little bit about him? We've got quite the roster at Home Invest right now.
Yeah, talk about the best analysts in the world. So Ashton, he's screened over 5,000 multifamily properties and helped submit some of the bigger multifamily purchases in the last couple of years. This guy's been part of that team. We recruited him. We brought him to our organization, and he just understands the numbers behind markets, number one. So job growth, population growth, and then the numbers on the asset itself. He knows how to dive in and ask the tough questions to make sure that we're actually getting a good buy. So he's been a huge lift to our team. We've pretty much doubled the amount of offers we're able to put out by adding him to our team. And I expect really good things from him going forward.
Yeah, he is awesome. But he's out looking. I mean, right now we are underwriting roughly 100 properties a month, sometimes more. He's looking at all of them. He's putting out maybe 1 in 10 he's putting an offer in on. But we're doing a lot of work to bring these great deals to the table for you. And we just wanted to show you why. Like what's going on in the market. That's the whole point of this. That's going to bring us to the the rate cuts. So did you read this article, Nate? This article was really interesting to me. Talking about they might end up cutting rates again this week.
Yeah, Thursday. So it's usually on a Wednesday, but they moved it because of the election to Thursday. So we'll get to see a little bit more of Jerome Powell's brain, or at least the Fed's thinking, on Thursday when they come out and tell us if they're going to hold rates, raise rates, or cut rates. And what I found the most interesting in here is there's some contrarian thinkers on this. A lot of people have been betting rates will continue to cut because that's what the Fed forecasted. But there's a couple contrarians that they interviewed saying, nah, we won't see a cut. It's going to hold until December. So let's see. Let's see what happens.
Yeah, I was trying to find where they were talking about December. Do you think it's going to depend on who gets elected? I mean, I'm sure that it will.
I hate to even say yes to something like that because it shouldn't. It shouldn't at all. But it could, it could.
I mean, everybody who's making decisions has a human brain, and they're like, it's hard not to have sentiment. I agree with you. I don't think that they should do it, but I mean, we should all eat super healthy food and go to the gym every day. Oh wait, Nate does that. If you guys don't know, I'm teasing you a little bit, but honestly, I mean,
I'm going to quote Robert Kennedy Jr. back to you. No, I won't. Let's not go political. But yes, you're right. It could. The Fed could come out on Thursday and say, you know what? We decided to do this. Who knows? We don't know. But numerically, it was looking like not so like the scales that the Federal Reserve measures on determining if they should cut rates or raise rates up until 2 weeks ago. They probably should have come out and said, you know what, we're just going to hold rates right where they're at. But the jobs report that just came out, it was terrible. Like worst numbers that we've seen in a long time. So the wrecking ball that they've been taking to the economy, which essentially that's what the Federal Reserve does when they raise rates, they slow the whole thing down. It's worked. They've slowed the whole thing down. The economy is slowing down. Jobs have terrible numbers, at least from this most recent jobs report. So they should cut rates based on the jobs report.
They should, but will they? I don't know. To me, I feel like everything is up in the air right now. Like, who knows, Nate? The world might end tonight.
No. No, sir.
We'll see. That brings us to our last article, and I thought this one was interesting. They had a panel on the economic real estate forecast for 25 and 26. Nate, you love spreadsheets and data a lot more than I do, and this article had a ton of data in it. Did anything stick out to you? I think we can talk about office, we can talk about commercial property. They covered all of that in here. Anything stick out to you?
I only really got to get into the office part of it, and office. So the consensus in the industry is that commercial real estate as a whole has hit bottom. Those of you that don't follow commercial real estate at all, if you only look at house prices on Zillow, you wouldn't know what I'm talking about, but let me explain from a high level. When interest rates went sky high, commercial real estate values came down. Office came down like doubly down. Like, I don't know if that's a proper word, but office came down a lot, not just because of interest rates, but because of the COVID economy. People stopped going to the office. They started working on platforms like this, online video calls. And so every other class of real estate in the commercial sector, industrial, multifamily, strip malls, shopping malls, the consensus is that it's bottomed out. It's now only going to go up from here. That's the consensus. But office, everyone still thinks there's more to go. So if you're a betting person and you don't want to catch the falling knife, don't jump into office space yet. That's kind of what I pulled from reading the data on it.
I mean, I like this graph that is that's right here for us to kind of check out. You can see all the way on the far right, office was super negative, and they're expecting it to be back to positive. But if you look through there, senior housing, flat across the board, which I found that one interesting. I thought that we would see more senior housing growth. Single family housing rental, we actually had an article we talked about last week on the Opportunity Zone where they were saying single family is coming back. We were actually talking about this. I talked with somebody earlier today about this because there are so many people moving out of short-term rentals and they're selling them, and they're now going into full-on single family, like not short-term, long-term rental because they're more profitable, and landlords are starting to scoop them up. The market's slowly shifting, but that's the genius of a market, right? It always reflects back what is going on with the investors. All right. We want to cover our deal just one more time, because if you are looking for something great, if you're looking for some tax breaks going into the end of the year, if you are looking for infinite returns, which I think is one of the best things that you can possibly do for yourself, and if you're looking to be like the people in New York and get ahead of the curve, Nate, do you want to put the OM back up for us?
Yeah, I want to just ask this question. Okay. If I invest 100 grand, let's just hypothetically, I'll put this picture up and we'll talk about this deal. But if we invest $100,000 and at the end of the year, we make 6 grand back in rents in our pocket, what is our rate of return? Let me know in the chat. Type it with me. I know this is seems like a small exercise, but bear with me for a second. You'll see where I'm going with this. If I put in 100 grand and I make $6,000 in rents at the end of the year, what was my rate of return? My ROI, as they say. Put in 100 grand, I make $6,000 back into my account. What is that rate of return? And don't worry, I won't grade anybody. No judgment zone here. Ralph, Lydia, I hope, Steve. Yeah.
I hope Ralph is not driving.
Wow, he nailed that while behind the wheel. Yes, 6%. Okay, perfect. Now, let's just say that I put the same $100,000 in, and then at the end of the year, I get all my money back. The investment gives me all my money back. So I got my 100 grand back, and I made $6,000 in rents. How much is my return on investment then? I got all my 100 grand back, and I got 6 grand in rent back. You guys are good. This is a smart group. Yeah, Ralph typed the word infinite, and I'm going to argue that it's infinite. Lydia says 106, mathematically correct. Anya says 106, mathematically correct. How about this? At the end of year 1, I got all my money back, plus I made 6 grand in rents. Year 2, the rents go up. Now I get $8,000 because the rents went up on the building. on year number 2. I already got all my money back on year number 1. Year number 3, rents go up again, and I make $10,000. Year number 4, I make $12,000. And remember, I got all my money back year number 1. What is my rate of return at that point? 4 or 5 years into ownership. Where I'm going with this is Ralph's answer, infinite, is the one that I'm looking for. Now, I know if you get a financial calculator out, it doesn't come out and say infinite. I know it doesn't do that. But when you can invest in something and get all your capital back or most of it back and still receive dividends from it, rent checks, potentially forever, those are the kind of investments that catch my attention. Now, back in 2010, they were everywhere. Like literally, like every month, we found a property that we could do that. We would buy it, we would renovate it, we would lease it, we'd refinance it, we'd give our investors back all their money, and we'd collect cash flow on that thing forever. And it was like free cash flow, infinite return. And by 2012, they started to disappear. By 2014, all the hedge funds came into the game and none of those deals were left. They all got gobbled up. I haven't seen deals like this in a long time. We've been hunting for them, but literally this is only the second one in the last 2 years that we found. And so I feel very, very blessed that we were able to find it. The team has worked incredibly hard to deliver this. And I feel like it was just in time, right in time before the end of the year. It'll be the last deal that we close out 2024 with. If you like deals where you can potentially get up to an infinite return, then this is one you'll want to pay attention to. I'll just put Sue's link in the chat. I know she had to go. If you want to talk to our team about that, then book a call with us. If you're following us on social and you don't see a link, just put the word call in the comment section and our team will send you a private message with the link so that we can get you on a quick phone call and give you all the details about the deal. Thanks, Steve. That's that deal, man.
Awesome. Investing this year, will it provide savings in 2024 to offset W-2 tax income? Nate, are we going to have the cost seg done?
We got a prelim cost seg study on it. If you're looking for a tax deal specific, we actually have one. We closed on it. We used some of our money and we took out a loan for part of it as well. We have a deal we closed, it was roughly a month ago, called Pine Tree Path. Beautiful asset. That's the one with the tax perks. There's not very much room left in that deal, but if you want tax perks, then ask our team about Pine Tree Path. That's the tax play. This particular asset does have some tax perks, but they're much stronger over on Pine Tree Path.
Yeah, if you are interested in tax breaks, if we're coming to the end of the year, you know that your accountant is going to ask you. Here's the thing, guys. If you don't get to us by the end of this month, if you wait until after, I would say December 10th, December 12th, December 12th is my birthday, by the way. Don't wait past my birthday. If you wait past my birthday, bad things will happen because you're not going to be able to get it done by the end of the year. Everybody starts going on vacation. Everybody checks out. Nate, what happens towards the end of the year? Because this happened last year. Everybody was like, hey, yeah, the 20th, they're knocking on our door. We need a tax break. It's too late. We can't get it done for you. Is it worth?
The IRS has the cutoff line legally of December 31st to move money. But what happened to some investors last year is that they wanted to move money from either their financial planner, their IRA, 401k, whatever it was. And we had a couple that they just couldn't because people on their side of the fence were on vacation. They couldn't get documents. They couldn't get transfers done. So about December 15th, pretty much the financial world starts going on vacation. So if you're exploring tax moves, I would explore them now and then make your placements by about December 5th, maybe 10th, the latest Steve's birthday, but I would do your placements as early as you can. Explore everything now so that you know what you're going to do before everybody goes on vacation. Our deals will be completely full. By the time Steve's birthday hits, December 12th, I anticipate everything that we have will be totally oversubscribed.
Yeah, if you know you're going to need a tax break, start talking to us now. Nate put the link in the chat. You can click on that link. It'll get you on with me or with Sue or with Doug. All of us can help you. It's just a short call. It's just informative. We are not high pressure salespeople by any means. We are here to serve you guys first and foremost. And Sue is still here. Sue, you're hanging out with us. I love it.
Lydia's other question was, will investing this year will give tax savings for 24 to offset income? And the correct answer, Sue started typing it in the chat for us. It's this year. So it like anything that's happening this calendar year, you can get, and you can generally get tax savings for an additional couple of years after that. Every property is a little bit different. It's why we hire a specialist called a cost segregation specialist to go on site at the property and really do it the right way. But usually properties give 3, sometimes 5 years of really solid tax benefits for people.
Awesome. All right, Nate, that brings us to the last segment that we have. Lydia has a question. Can I use an IRA annuity to purchase real estate, or will I need to surrender the policy to invest in?
Sue, I'm going to toss that question your way. It's above my pay grade. I don't get into annuities.
Sue,
you could absolutely use your IRA or solo 401k or any type of retirement account to invest in real estate. You might have to roll it over into an account that you could use in real estate. Like if you have a regular IRA, you'd want to have a self-directed IRA. So, but book a call with us. I'm more than happy to talk about retirement stuff.
So Sue, you actually have some experience in annuities and insurance, correct? So you would be the right person.
When I knew I was going to retire from the airline and work with Nate full time, I rolled my traditional 401k and my Northwest Airlines pension into a solo 401k, which is my real estate business's retirement plan for me. So I invest with that money. I've been doubling that money every 5 years for the last 10 years. And I don't pay any taxes on it now. There's no capital gains or anything like that. I just keep growing that money. But someday my son will have to pay taxes on it because I probably won't use it. But
it's good.
If you guys haven't met Sue yet, this is Super Sue. Sue started as a client in the business, and then after we got to know one another and work with one another, Sue came over and started helping other people just like you invest. She's invested over $1 million of her own money. She understands this. She's not a salesperson. She's literally Aunt Sue. That's what we call her on the team. If you want to have a conversation, you can talk with Sue. You can talk with Steve. We've also got Doug and Patrick. So I'll put that link back in the chat one more time for folks as well. Sue, thank you for that help.
no problem.
Awesome. All right. So you can click the link. You can get on with myself, Sue, or Doug. And we are going to move into the last segment. We are going to teach you guys a little bit. So there are 3 questions that you want to ask when you are talking to somebody about getting into their syndication deal. So whether it's us here at Home Invest, whether it's somebody else out there, there are a lot of deals. And there are a lot of different moving pieces inside of the deal. We wanted to give you some questions that you should ask the syndicator or the person that you are on the phone with to know whether it is a deal that's going to be a good place for your money. Nate, I'm going to go back and forth with you. We'll kind of wrap back and forth. What do you think the first thing that somebody should ask when they get on the phone with someone is?
Yeah, I would. So Steve, both you and myself and Sue, everyone here, we invest in different things. We favor our own stuff because we know it and we control it. We know it's going to perform, but we've invested in other stuff. And here's what I do when I'm evaluating somebody else's deal. Okay. I want to know about the operator. It's an expectation that the deal itself is in a strong market, population growth, job growth, et cetera, and the asset underwrites the right way. But what people I think sometimes don't dig as hard on is the operator or the operations team. Okay, so what do I mean by that? Have they been through a down market? Have they survived a down cycle? So right now, insurance costs are going which direction? Labor costs are going which direction? All costs in this industry have gone up in the last 2 years by a lot. And the economy's gotten tighter. It's been getting tighter for renters. Steve, this is something you've reported on a lot over the last 6 months. Credit card debt's going up. Defaults are going up a lot. Has an operator survived a down cycle like that? where they had to face their revenue stream being tighter, that's tenants being more credit burdened, with expenses going up. And if the operator has not been through a cycle like that, I don't know that I'd plant my money there. That's number one question for me, Steve.
I think, have you gone through a cycle and not just bought places, but also bought and sold? Have they renovated units? Have they done things when the market was difficult? That's the first question. I agree. I think that's a very good question. The second question that I want to point to has to do more with the payouts. So I wish you had the picture of a flexible waterfall. If they can't explain to you how they get paid, how you get paid, and how they get paid in one sentence, in a way that you understand, you should probably run. That's my rule of thumb. Nate, that's a little different than I've stated before, but
You mean if it's complicated, we shouldn't stay in the deal, Steve? If it's complicated,
complicated is different. If your payment as the person investing, if they have to explain it to you with multiple spreadsheets, I think that might be difficult.
It's funny, a mentor of ours, they just closed a $90 million apartment building and been following their work for a long time. He explained it like this. He said, if the OM, that's the offering memorandum, is more than 30 pages, you should probably run. Most deals, they speak for themselves in the first 5 pages. So Steve, if I could, I'm going to highlight the one waterfall. This is like the splits. How much profit do you get as an investor? This is important. Okay, the one that's probably the most concealed in this industry is that when the team that's running the project goes to the bank and does a cash out refinance and gives you back your money, if that happens, it doesn't happen very often, but if that happens, usually they change the economics. They suppress you as the investor. They take more as the manager running the deal. We do not do that, just so it's 100% clear. We keep the same economics on day one as in day infinity. We do not change the economics. And I think that anyone that's changing the economics, shame on them. They should get their hands slapped for putting it too far in the cookie jar.
So I want to talk about that a little bit more. So changing the economics, the way that this would look, the way that they'll try to explain this to you is, hey, year 2, when rents have gone up a little bit, we're going to change the payouts to reflect that. And instead of a 6% pref, we're going to pay you a little bit less. We'll probably pay you a 4% or 5%. But because rents are more, it's actually going to be the same amount. And instead of a 70-30 split, it's going to move. We're going to change the splits around. And you'll see this reflected. This is why it's called a waterfall, because it'll be a spreadsheet that breaks down going across the board. If you see something like that, they're going to try to put your mind at ease by telling you, well, we're going to be making so much money, it won't matter. If somebody, Nate, if I came to you and said, hey, we're going to be business partners and we're 50-50 until we really start making money. When we really start making money, you know what? I'm going to give you 40% and I'm going to take 60%, but we're going to be making so much money, it doesn't matter. Does that seem like a good deal?
Doesn't feel fair.
Right?
Doesn't feel fair.
Especially considering I'm using your money to build the business. But really, I just want to give you 40%. We're going to be making so much, it doesn't matter.
Yeah. No thanks. I'll pass.
So, okay, that is rule number 2. The first one, have they been through a difficult market cycle? Number 2, no flexible waterfalls. And number 3 has to do with due diligence. And this is where I think a lot of people get burned. They go in with somebody who can talk really well, but they don't know the numbers. This is one of the reasons that I love that we have somebody who has analyzed more than 5,000 deals now on our team. Not that we didn't do a great job before, because we did. But now we've got the best of the best. What are some questions that people can ask, or how can they see in the numbers whether or not the team putting the deal together has done their due diligence well?
Well, you could always request the T12s, which is the trailing 12 months of income and expenses. You can request the rent rolls. And based on just those two documents, you could really put together your own forecast. You could skip the operator, so to speak, and write your own model. You could do it on the back of a napkin. You could do it on a calculator. You could figure out what the cap rate is. You can do your own due diligence off of those two documents. What I really want to do when I get those documents is just compare it to the numbers being presented. I'll tell you that every broker in the world that's trying to pitch a deal right now, they usually present numbers that are not quite on par, meaning they make bad assumptions. They don't account for vacancy. They don't account for repairs, or they don't account nearly enough. They'll say, oh no, this market 5% is good, when in fact the property needs a lot more than that. So I want the actuals. I don't want anyone's projections. I want actuals, which I find on the T12s.
So I'm going to take it a step further. The T12s are the trailing 12 months. When you look at maintenance, when you look at rents, you should see fluctuation. You should see things change around. If you see a bunch of vacancies and then 2 months before the deal got put together, you see the vacancies go all the way to non-existent, you should be wondering, what did they do to get those people in? Did they actually check credit? Did they find good tenants? Nate knows all of these tricks, and he's the one who taught them to me. We used to talk through all of this stuff, and they're things that you can see as an investor. What are some other numbers that they should look at, just glance at on the T12s, Nate?
Well, beyond T12s, I'll talk about another document. I'll come back to T12s if you want to go into too, but insurance claims. Right now, one of the biggest variables in the multifamily space is how much is your insurance going to cost? Let me ask you guys in the chat, do you think insurance rates are going up or down at this present time in history? Are insurance rates going up or down at this time in history? You see, we had Hurricane Ian come through 2 years ago, destroyed a big chunk of Florida, and it sent a lot of insurance companies out of business in the state of Florida. And then this year, it's been a devastating hurricane year, all the way from Florida to North Carolina, unfortunately. And insurance rates, not just in Florida, not just in North Carolina, but even in Kentucky, in Oklahoma, in Tennessee, rates have gone up, and they're going up more. And so one of the due diligence items you really have to dig into is, I'd like to see all claims you filed on the insurance. I'd like to see your existing proof of insurance. I want to call that company. I want to do verification. What we're finding, we're underwriting an asset right now that when we called to get quotes on it, the insurance broker said, well, I can't give you a quote. Why is that? Why can't you give us a quote? Oh, because there's still an open claim on that property. And until that open claim is resolved, we don't know how to price it. This is very real stuff that's happening. So when it comes to due diligence, that's the next most important document that I would ask for, in my opinion.
Awesome. All right. So we gave you 3 different things that you should be looking for. 1, go through the T12s, look at numbers. They should line up. Look at insurance. Make sure that the operator went through a difficult cycle before. These are the things that you want to look for when you're going through your due diligence to see whether or not you should invest. If you're interested in having a conversation with any of us here at Home Invest, you can click on the link that is in the chat. We will see you. We've got tomorrow, Nate. We're doing a post-election political breakdown. You want to run through that one more time? I saw Paige put the link in the chat as well.
Yeah, if you scroll up to where Paige put a link, tomorrow, a little bit earlier in the day, 1 o'clock Eastern time, you can jump on with us. We'll have a post-election preview of what economic moves you can make for your real estate investments based on election results. So you can jump on. We're also doing a training. Well, the first part of it will be election related. The second part, we're teaching people how to fund these deals. If you want to go out and find a killer deal like the one that we just found and get funding for it, we'll be teaching that on the back half of that training as well. And then on Saturday this week, if you can't attend tomorrow, then come Saturday. Both links are in the chat and you can click it, get a free spot. Keep in mind, as soon as we close this Zoom call, those links go away. So you want to click on the links now. If you're waiting to book a call with Sue or Steve, click on the booking link for that. If you're waiting to register for the training tomorrow or Saturday, click on those now because they're going to go away in just a minute.
Awesome. All right, guys, the links are in the chat. It has been our pleasure to hang out with you this afternoon. We will see you next week on the Opportunity Zone, or we'll see you tomorrow. You can click on any of the links to either book with us or for the information for tomorrow. If you need help with anything, you feel free to respond to any of the emails that we have sent as well. Those will filter through to either customer support or to us, and we will get back to you. We can provide the links there as well. Wishing you guys an awesome day. Make sure you watch television tonight, pray for our country, and we will see you guys here tomorrow or next week. Have an awesome week, guys.
Guys.